Happy Friday, traders. Well, the wait is over. Tonight, finally, the risk event the market has been waiting for some time. Powell speaking at the Central Bank Symposium at Jackson Hole. So look, market pricing going into Powell's speech tonight is quite high for a September rate cut. The probabilities are as high as 75%. So the market basically believes that with a lot of confidence that they are going to get a rate cut in September. So I think that the market is certainly skewed for disappointment tonight when Powell speaks, because look, I don't believe that Powell will actually commit tonight in his speech to a rate cut, and that the Fed will start their easing cycle again in September. And I think there's a couple of very good reasons why Powell is not going to commit to and align with the market's pricing for a rate cut. And the first reason is the labour market. That market pricing of 75% for a rate cut is largely on the back of just one bad non-farm payrolls employment number that we got on August the 1st. And so the question really is the labour market really weakening? And if we look at the unemployment rate is still at 4.2%, which is still very good. If that was spiking above 4.5%, maybe that would set off some alarm bells, but it's not. Also, initial jobless claims have been, you'd expect them to be spiking up if the employment market was rolling over. And again, we're not seeing that. So I think the Fed certainly will, and Powell will want to see another employment number, just not one, before they make a decision. They get that in early September. And possibly, that could be a good employment number. And then that weaker number is put in the revision mirror. So look, yes, firstly, the labour market may not be as weak as what that August number told us. Secondly, also, is this month's PPI number was a big shock to the market. So PPI had its biggest rise in 3 or 4 years. And what that's basically showing is that obviously the producers are currently taking the hit from the tariffs and the cost of the tariffs. But what generally happens is that at some stage those producers are going to pass on that tariff cost to the consumer. And PPI generally leads CPI, so when you get a big rise in PPI, then you are going to, with some sort of lag effect, get a rise in PPI. So the Fed does, CPI. So the Fed does know that CPI, the tariff effects still haven't come in yet, and in the next few months they will see an increase in CPI and inflation. So that has been one of the reasons why the Fed has not cut so far and been stubborn. And I would imagine that Powell certainly wants to see some more data on CPI, and he gets that on the 11th of September, and that's almost a week before the Fed meeting. So the Fed and Powell certainly doesn't really gain anything by being super dovish tonight and aligning with the market pricing of 75% probability for a rate cut. So again, I think that Powell tonight is still going to be data dependent, and that will disappoint the market. Generally, when the market gets disappointed, you get risk-off trading. So for equities, equities have been in a raging bull market. With obviously trading at very elevated levels and near record highs. So potentially, could equities have some a retracement or a decent sell-off tonight? Yes, possibly that could happen. And it's just worth noting that obviously going into end of August and into September, seasonally that's one of the worst months of the year. And it's generally on average down 1%. So chasing equities fresh long at these sort of levels probably isn't the best bet. And obviously if you do have some long-term positions as well in the money, maybe taking some profit off the table before Powell is also maybe a wise thing to do. As far as the currency space is concerned, the currency market is convinced that the next big trending move in the currency market is a short US dollar trade. And it's a trade that is high conviction, that the market desperately wants to put on, but it would need a green light for that. And as we've just talked about, if Powell disappoints tonight, which I believe he will with high confidence, you're not going to get that green light. Market may actually get caught short going into Powell with short US dollar positions. And potentially we may see a US dollar rally on the back of Powell disappointing. But certainly watch what bond yields do, US 2 yields, 10-year yields. If those bond yields are not going, lower, do not sell US dollars because it is not going to work. And just finally, with gold is something that yields nothing, loves a dovish Fed. And it loves obviously rate cuts. So obviously if Powell disappoints, gold's not going to like that. And then also gold obviously being priced in US dollars. If we do have a stronger USD post Powell speaking, that is going to weigh on gold as well. So potentially gold could retrace back down towards the 3,300 levels, but the big support there is around that 3,280. But anyway, look, the key takeaway with Powell tonight is that we've got a market that is going priced in for a September rate cut, very aggressively, very confident they're going to get that rate cut. And I don't feel that Powell tonight is going to align with that market pricing. And so the risk is tonight that he will disappoint the market and then risk off trading. Anyway, good luck with your trades, and we'll catch back in with you next week.